I want you to dive very deep into everything the program has to offer. I really would like to hear absolutely every single benefit the potential clients could understand in details. What Sonyma program is, what is it designed for, who can benefit and use it.
The name of the program is Sonyma. It stands for State of New York Mortgage Association. It's a New York State program. Money is tight, inflation is high, right? People are worried about money. This program is awesome for a first-time home buyer because it allows them to get money back at closing that they can use for parts of the transaction of the real estate process. And it also gives them a better rate than what the market's at. So it's all safe. It's backed by New York State. It's a bond loan program. This program basically lets the person get 3% back of the purchase price or up to $15,000 back in cash that you can use for closing costs. You could buy the rate down even more. You could use it for a whole bunch of different options.
Sam, What do I do to qualify? What do I do to apply? What's the income requirement?
$136,000 is the income limit for 1 to 2 people. So if there's a gross household income of that or less, you can fit into this program. Now, if you add a child into that, or let's say a grandmother that's going to be living with you, that goes up to around 160.
Wow.
Right, which is pretty good for New York State. That's a lot of money.
So what's the catch, Sam? What's the catch to apply to get the money? And I know that in the end of the day, it's always the catch.
So if you buy the home, you have to live in it for 10 years. It's got to be your primary residence for 10 years. But I look at it this way, right? Even if you stayed in the house for 5 years, and you had to pay back half of the money you got back, you still got half of that money back.
Is there restrictions on, let's say, besides the income, like the credit?
This program is great because unlike a conventional loan where if your credit's really low, the interest rate will be higher. This program, if you have a 620 credit score or an 800, the rate is the same.
Well, tell me, is there any kind of restrictions on what you can buy?
You could buy a single family, a 2-family, a 3-family, and a 4-family. Generally speaking, anything over a 4-family becomes commercial.
What about co-ops and condos?
Co-ops are awesome, right? So I don't know if everybody knows this or not, but when you buy a co-op, the closing costs are significantly less than a single-family home. So essentially, if you're getting $10,000 back and your co-op closing costs are, let's say, around $4,500 to $5,000, you're using that money to cover your closing costs entirely, and then you can walk away with some cash or even put it toward the down payment.
Or buy down points.
Or buy down the rate even further. The interest rates on this program are so good that they're basically a point below where the market is right now. So if let's just say rates are touching 7%, the starting rate on this program with the down payment assistance is 6.25%.
Wow.
So they're almost a point better.
Wow. So when you buy down the points, how much towards the points you can use the money that is left over?
So you can buy it down half a point. So technically, if you're at 6.25%, you could probably get that down to somewhere, depending how much money you use to buy it down, you can get it somewhere into like the high 5s right now, which is kind of pretty unheard of for rates being almost 7% right now.
And are you required to put a certain down payment to qualify for the program?
So you can go as low as 3%, but as me and you both know, we do co-ops. 20% is usually what they probably require. So depending on where you're buying.
And then you need to have a credit. What's the cap of a credit?
The lowest credit score I think they'll go down to is around the 600s.
This program looks like it could be ideal for my first-time home buyers to all my co-ops.
Who's buying a co-op?
Starter.
It's a starter home, right? It's a great entry point into home ownership. It's low maintenance. You don't have to go out there and shovel your snow, replace your hot water heater.
How do you convince buyers that they need to buy into this program?
The job of a loan officer is to be able to find where you fit. If you don't fit and you make more money than the income limit, we can't help you there. If you're buying a property that's over $806,000, we really can't fit you into it. But if you told me that you were going to buy a co-op or a condo and you're going to stay there for a decent amount of time, I think this is the program for that person.
So it sounds like this is a perfect program for a lot of people that are starting off.
Yep.
It's only open to New York residents.
Yep, correct.
And every single one that has a job, that has a stable income.
The number one problem we run into is they have their work history, they have a good job, they have stable income, but we all know this. It's hard to get ahead in New York, right? It's hard to save money. We have bills, we have car insurance, we have our car payments. The number one thing that people don't have is the down payment.
Correct.
So right off the bat, this program is helping you with that 3% that you're getting back.
When they walk into your door, there will be no excuses but to help them find a way to become a homeowner in New York City.
And I think I've told you this before. We're a bank and we can broker loans out, right? So if we need to take a loan somewhere else to make it work for that person, our goal is to get them in a home.
This is a great information on Sonyma program. Anyone who is interested, please reach out to Sam. He's very easily approachable. Please follow, call, and reach out and see if you can qualify. Thank you very much.
Thanks, Olga.